Welcome to the Solution Point, where we talk about solutions for your life, your business, and the law. And today I have a very special guest who's a good friend, and we're part of a networking group. So I've gotten to know Dan a little bit, and he always has great ideas and solutions. So without further ado, Dan, why don't you tell us a little bit about yourself? Give us your background, your company, and tell us what we need to know.
Sure thing, Mike. First of all, I really appreciate you having me on. This is a pretty cool opportunity. Love being able to talk to your clients. We deal similarly, but not doing the same thing, obviously. I do mortgages. So my name is Dan Hardy. I work at My Community Mortgage. I'm a mortgage broker. And before doing mortgages, I was a firefighter. And I loved being a firefighter because you could be a jack of all trades, master of none, right? You can put out fire with hoses, you can do car wrecks, you can do extrication, you can do ropes and technical rescue, swift water rescue. And since my hearing has gotten a little bit bad and now that I do mortgages, it's kind of the same thing. It's jack of all, master of all. But love it. Can do investor loans. Can do first-time home buyers, USDA, rural loans, construction loans. It's kind of the same, just a little bit different, and I don't have to wear bunker boots to work anymore.
That's kind of a neat perspective that you bring to the mortgage, is coming from a situation where you're dealing with crisis all the time to something where maybe there isn't a big crisis, but this is one of their biggest investments ever, so they need all the help they can get. So having that hero coming in to help you with your biggest investment that you might make in your life, that brings in a different perspective on it.
Yeah, I would definitely say that the mindset and the attitude of a firefighter is I didn't cause this problem, but I'm here with resources to do everything that I can to make it better, to to try to get this problem solved. And I love that when a firefighter is inside of a building, they don't think, oh no, there's only two exits out of this room, this window and this door. Their mindset is, what if I got to go through this ceiling? What if I got to go through this wall? Can I dig underneath this floor? Like, I'm going to get out. There's a way to solve this problem, even if it's not the obvious solution that everybody else is looking at. There's no one right way about doing these kinds of things. And so that's what keeps every day different for me. I could come into a mortgage situation with a fresh set of eyes and say, this is the best solution. Let's look into this. Because yes, this is big money. These are 30-year decisions that people are making. They're doing 30-year mortgages with me very often. And so we want to make sure that it's right and that we do the best that we can with it. So anyway, I do bring that different perspective to every loan scenario I go to.
Well, to that end, why don't you tell us the problem that you have a solution for?
Well, I would say that I'm a mortgage broker for a reason. There are banks that I could work for. There are retail lenders that I can work for. And the problem with that is that most people think that they're getting the best deal, and usually they're not. So if you just go to a bank or you go to a builder's preferred lender or walk into any retail lender, you're seeing one option. This is what I have for you. And often it's very limited in flexibility, as well as it's might not be the best deal out there. And so I'm a broker, which means that I work for the client. I work for you. I don't work for the bank. I don't represent the CEO of this bank, and I have to do everything that they say perfectly, and I have to make every client fit into this box that they've given to me. Whereas I see a client that comes in, they present to me their situation, and then I go about finding the best solution for them across dozens of wholesale lenders and banks. So I'd custom tailor solutions. The problem is that people think I have to go to where my agent is telling me to go or where this builder is telling me to go. And the solution to that is that you can come to a mortgage broker and we're going to find you the best solution. What you're being presented might not always be the best for you.
Yeah, and so I think that's very true. I remember my first mortgage was, you got to go with the bank, the local bank that everybody goes to, and you got to meet the guy, and he's the one that's going to get you set up. And I wound up developing a good relationship with that person and the bank. But, thinking back, it's like, what other options could I have had that maybe I would have gotten a better rate or got in a better deal. I mean, you don't know what you don't know, and you can't go back in time, but you can get yourself educated and find somebody who has more resources that they can present different options to you.
Well, consider this too, Mike. When you walked into that bank, you walked into possibly a three-story building on a corner piece of commercial real estate that was not free. It was very expensive. And how do banks pay for their overhead? The buildings, all of the staff, um, all of the different things. It's in their interest rates. It's in their products that they offer. And so I've kept a very lean operating cost so that I can just roll all that savings to the client. I don't have to pay for fluff staff, for big buildings, things like that. And so the bottom line is I solve the problem of people people overpaying for their loans. And who's to say that even though they are willing to work with a bank or a retail lender, if you don't fit into that box, you get denied. And so another problem I solve is that I have the flexibility of looking at that file just like a firefighter would. Are there other ways that I can get this done and bring some creativity to the table? And so that's that choice, clarity, and confidence that I offer to anybody willing to work with me for their mortgage.
Tell us kind of what kind of a typical customer would present to you with. Hey, we want to buy this house, or do they usually start with, hey, we're going to start shopping, we need to know what we can afford?
To be honest, the way that buyers of houses these days operate is they find a house on Zillow, and then they call a realtor and they say, I want to go look at this house. And that realtor says, can you afford this house? And they're like, well, I don't know. And so let's break that system. Don't go in that order. I want borrowers and buyers of houses to reach out to me first, and we talk. Can you afford this house? We do an application. We look at income statements. And what's really cool about being a broker is I don't have to look at tax returns. If you're self-employed, I can look at your business bank statements because we write everything off on our tax returns as self-employed people. You can't always qualify for a conventional mortgage, but long story short, I think loan officers need to have that first conversation with borrowers. But right now, people come and they say, well, I'm ready to buy this house. I don't have 20% down, but I know that I have to have 20% down, and that is a common misconception. Is very often you can get into your first home with an FHA loan at 3.5%. So if you're buying a house at $300,000, you need $10,500 as your down payment. And we also have down payment assistant loans. If you want to buy conventional and get a little bit less PMI, and we can talk all about that whenever we have our phone call. But if you want to go conventional, you don't need 20% either. It's 5% down. And anyways, there's a loan solution for just about everybody out there. And here's the next thing is if I can't find a loan solution, I'm going to give you a path so that you can have a mortgage solution. We do a soft credit check. We look at some different moves that we can make to increase your score and to then be successful in getting a mortgage and owning a house, which I think everybody should do.
Yeah, no, I think that there's a bunch of solutions there. So the idea is when you're going to go shopping, you make the decision, hey, it's time to get another house because we've had another child or another couple of children. Now we need a little more space. They should come to you first. What are some of the things that are in the market right now that might be things that people should know? I know that right now, the date that we're recording this, the mortgage rates are quote unquote high, but if you lived in the 70s, you're like, yeah, this is not high.
Yeah. But that's all we get inundated with, right? The news cycle. And the
Right.
news cycle says the Fed isn't lowering the rate. Rates are at a 5-year high, 10-year high. Does that necessarily mean that it's a terrible time to buy a home? The answer is no. Um, and so when people are thinking, it's time. It's time we either buy our next house or we've been renting for most of our lives. It's time for us to buy a house. Um, some common things that are happening in the market right now is yes, interest rates are higher than they were right around COVID. 2020, 2021, um, where rates were at 3%, today they're closer to 7, 6.5 to 7. And that does affect what the monthly payment would be. But I want you to also know that there's some effect on the prices as well as a seller's attitude. Um, Sellers may be more willing to give discounts or seller concessions to help buy rates down or to pay for closing costs or even just negotiate on their prices because when the rates are higher and other people, not you, educated buyers, other people are saying, I'm just going to wait till the rates come down. That means you have more of an opportunity to be making offers, to negotiate on prices, to get seller concessions to help pay for closing costs. You can create a really successful situation in negotiations with your agent and with your loan officer working for you.
Yeah, and everything kind of boils down to supply and demand. The more sellers there are, the fewer buyers there are, the bigger the opportunity. And it's kind of the way it was around COVID time. Everybody was suddenly like, "Oh, I need to buy a house because I'm going to be stuck here for 24 hours a day.
Yep.
I need something bigger. I need something else. I don't have a place to escape to anymore."
Right.
Uh, and so you had a flood of buyers and not enough sellers. And I think that's kind of balanced out now.
Yep.
But the interest rates are keeping buyers out of the market artificially, because I think probably 7 or 8% was my first mortgage interest. This was back in the early 90s.
Yep. My first mortgage was 2014,
Mm-hmm.
2015, and I believe it was in the fives. So, I mean,
Yeah.
we're really not that far off of that.
Yeah.
I
Yeah.
remember videos, though. So, when mortgage rates were 3%, and you could buy a house at 3.5% interest rate, they would list the house on Friday afternoon, and there would be a line of 30 people outside of that house on Saturday for the open house. And you're now competing on your offer. So this $300,000 house, you're super excited about it. You can afford the payments. Everything's awesome. You're now competing with 20 other offers. And so that 300 house becomes a 340,
Mm-hmm.
$360,000
Yeah.
house overnight because of bids.
Yeah.
I'm not seeing that kind of bidding war happening right now, and that makes just a so much less stress situation for
Mm-hmm.
anybody wanting to buy a home.
Yeah. Yeah. Well, Dan, I do appreciate your time. I think you've given a lot of solutions to our audience. Now, this is the time when we talk about core values. We're very much into using core values as to how we make decisions in our business, in our family. Why don't you share a core value with us and kind of expand a little bit upon it?
Yeah, I talked about this a little bit today at our networking event. Is that a mortgage transaction? There's a lot of moving pieces. There's a lot of moving parts. That closing disclosure has many different line items on it, from title, insurance, taxes, the sale price, the interest rate. There's all kinds of numbers on this sheet. And so my goal, my core value is transparency. I don't want any person that works with me to walk away with questions of hidden fees. Am I getting the best interest rate? Are you doing all that you can for me? Um, that transparency is my core value, because if you know that I'm focusing on transparency, that means that you're coming first, that I'm not hiding fees, I'm not inflating your interest rates, I'm not giving pressure. I'm here to just give honest guidance, real options, and a loan that makes the most financial sense for you, not for the lender or the bank. Um, that's where that transparency is absolutely vital. If there's ever a question, if you're seeing things that don't look right, or if you compare one to another and you're seeing that one's a lot higher interest rate or a lot higher fee in one of these line items, I can go through
Mhm.
that with you and help bring transparency to a
Mhm.
process that can sometimes be clouded. And I don't want it to ever be clouded. The goal is to help. Just like a firefighter, I'm here to help. I didn't cause this mess, but I'm here to bring clarity and a solution to the situation. And man, I want to celebrate home ownership with people. Um,
Yeah.
I don't want there to be any questions or ill will or feeling weird about anything. I want there to be transparency, openness, and let's communicate start to finish.
And I think that's one of the key things. I don't think people are put off by paying for things or getting charged for things. I think the biggest thing is when they don't know what they're getting charged for. And it's like, I'm just getting a bill for breathing. And by providing that, hey, look, well, look, this fee is this $2 title fee, it's just a state required law that says you have to charge $2 when you issue title, and it's just $2 and nobody really cares. But when they understand, oh, this is the state's requiring it, it's not like somebody sneaking in a $2 bill into the transaction.
Right.
Uh,
Uh,
those explanations put people at ease.
a common lender fee that people see is an underwriting fee,
Hmm.
$995. And they're like, underwriting? That person's just doing their job. It's like, well, that underwriting fee covers the loan docs being created. And loan doc sets now are 75 pages long. And so, and a lawyer and a paralegal have to make those loan documents and make sure that they make sense to all the regulations and all those types of things. There's a fee being charged because there's a lot of time that's going into developing, creating, printing, all of those loan doc fees. And then an underwriter who's taken the many hours to look through all of our income documents and tax returns and make sure that we're following the guidelines and doing things the way we need to do them. That's what
Hmm.
that fee covers. And
Yeah,
that's just one example of an entire closing disclosure that has lots of
yeah.
different things on it. You need to understand what they are.
And underwriting is something that's a little bit of a, underwriting. The name doesn't even describe what it is.
Right?
But I think when people realize, look, these are the people who are checking the file, making sure that everything meets all of the criteria. That number one, you're not going to wind up with a problem down the line. That you're not going to wind up having bought too much house, and then you're going to be in trouble later on because your numbers didn't really add up. It's making sure you don't wind up getting yourself in trouble, because there was a time pre 2008 when dogs were getting mortgages.
Yes.
You know?
Deceased
So
people were on mortgages.
yeah, and so it's just that, and the underwriting just was not solid there. I mean, the fee was still charged, but it wasn't being earned, so to speak. So it's important that those things are done, not just to protect the lender from having a loss, but it's more devastating to the customer because that's their credit history, that their forever home that they intended. And if you get a foreclosure, if you wind up getting into financial problem because you overextended yourself because nobody was paying attention, they didn't do you a favor by letting you buy the house. They did you a disservice. They got a commission, they got their fees, and then later on they had to recover the house. So
That's not helpful. That's not caring. That's a
yeah.
firefighter showing up to an injured person and injuring them more before they go on to the next call. That's
Yeah.
not what we're in this business to do, Michael.
Yeah. Well, Dan, thank you very much. If somebody's looking at getting a mortgage, tell the audience kind of what area you cover geographically and how they can get a hold of you.
Sure thing. So I am in New Braunfels, Texas. I do have a small office off of I-35 right north of Ruckel Road, but my license is statewide in Texas. It's also in Oklahoma and Virginia, randomly enough. I can operate in those three states. But what's really cool is for investors. So I do primary home loans for you to buy a home and live in, but I also do a lot of investment loans from a fix and flip when a house needs fixed up before it can be lived in by a tenant or by somebody buying that house. So I do bridge loans for fix and flips. I do rental cash out refinances and rate and term refinances if you're a landlord and you want to build a portfolio of rental properties. I love USDA loans that are a little bit more rural. Um, I've got a solution for everything, and would love to help. I really enjoy investors that are buying a 2 to 4 unit home, a duplex, triplex, or quadplex, and living in one of the units and renting out the other units to pay for their payment. Those are some genius moves that younger first-time home buyers can get into and just create successful rental portfolios from day one. It's really cool. So
Sounds good.
lots of different areas that I operate in. It's kind of like being a firefighter. I know a lot about many different things.
Yeah, sounds good. Well, how can somebody get a hold of you? What's
It's
the best way to get a hold of
homeloanhardy.com is the best place I send everybody.
you? HomeLoanHardy.
Homeloanhardy.com.
If you're looking for a mortgage, if you're getting ready to shop, as Dan said, go get qualified. Make sure you're looking in your price range so you don't wind up seeing the beautiful house that you really want, but it's outside of your reach. It's much better to not show up to this huge house and then realize this is not in our price range right now. So first, see what you can afford. Look at your numbers, and then you know what your budget is to move forward, and you'll be well armed because you'll have the opportunity to shop around the best rates and the best options you have.
You can walk into that dream home with a pre-approval letter in your hand that says, I can afford this house. That's so much better of a system and a process than going to that dream house and then going, Dan, can you help me? And I go, we need to work on some things. I don't know if I can help you right now, but I can help you later. That's a
Yeah.
bummer. I'd rather
Yeah.
you walk in like, I love this house and I am ready to put in an offer. Here's my pre-approval letter from Dan.
Yep, there you go.
Cool.
Well, Dan, thank you so much. And to our audience, if you found this helpful and you want us to continue having more conversations like this to help get you more solutions, hit the likes, the subscribes, give us the stars. You know what to do to keep this channel going. Go ahead and do that and keep watching, and we will keep bringing you solutions for your life, your business, and the law. We'll see you next time. Take care.